Hello and welcome to Pro Trader Strategies Market Commentary for Monday, April the 8th. My name is Eric Wilkinson, and some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal. I'm here to teach you some different option strategies you can then implement into your portfolios, but please do that in your own way. Also remember, past performance of any trading system or methodology is not necessarily indicative of future results. All right, having that out of the way, let's get it on with some economic data. It being a Monday, we usually don't get a whole lot of economic data, but we did get some good economic, or some deep, strong economic data. Not as in bullishness or bearishness type of information, but stuff that we can actually trade upon is really where I'm going with. Here in the United States, we got factory orders coming in at a negative 0.5%. That's in line with expectations, but we're seeing a lot of these pullbacks here and across the pond, even up north in Canada where they were having building permits. Came in at negative 5.7, expected to be a positive 2.0. I don't usually talk about Canada a whole lot, but this is building permits. And remember, we talk about building permits. You can pull as many permits as you want. It doesn't necessarily mean you're going to build. But one caveat to that is when you stop holding building permits, it means either you got a stockpile of them back here that you haven't used yet, or you don't plan to build going forward, both of which are not very strong economic data points, really. So we have that going on as well. All right, let's talk about the overall market. We've got crude oil moving higher here, up into the 64 handle. We talked about this a lot last week. If it got above this 23.6 Fibonacci extension here, then we were going to probably start to see a bit more of a pop happening because the overall market was trying to get short, defending this area, and once that area was compromised, that the shorts were going to feel like they were on their heels and start pushing higher. And this is the line in the sand we were kind of talking about right here. As soon as we got above here Friday, you can see we stayed there and we got a bit of a pop. Now, there's also some other economic data or news coming out that is affecting this as well. We've got OPEC looking to break up. Keep in mind, Russia doesn't really want to comply with OPEC's sanctions on how much they're going to be producing. So that is a rough spot over there that's causing a little bit of turmoil in oil. Then we've got Libya, where the Libyans are, in turmoil as well, and they are a major oil producer. Some of the oil coming out of that country might go offline in a sense as we start seeing some of these government infighting going on, and that is definitely going to affect their output from that country as well. So all of those things being said is driving crude oil higher. I believe that this is not good timing for the economy because we're seeing the economy start to slow a little bit, right? We've seen it show up in Canadian building permits, factory orders, things like that. The ISM here in the United States, Institute for Supply Management, hasn't gone below 50 yet. We need 3 of those in a row in order for it to be negative, but we have seen a few in the form of Germany and France going into negative territory for those. That is signaling a recession overseas. Then we throw in higher oil prices. That is a double whammy really to the economy because we don't want to see all of the money go towards oil and then not really create that velocity of money across the economy elsewhere. So it is a major tax on the retailer anyway. All right, so that's crude oil. Let me move this out of the way a little bit so you guys can see. Then we've got gold futures. They were really spiking quite a bit this morning. A lot of that having to do with all of this turmoil in and around what we're seeing with oil and not having good economic data points. That's going to drive gold higher as it is a flight to safety. That is a safe haven for as an asset. Most people will pull out of the stock market if they see that happening and roll it over into gold just as a marker, if you will, for your assets. to try and gain a little bit of value anyway. If the market starts pulling back, you don't want to see the equities pull back and you lose money, so you kind of throw it in a safe haven like gold. All right, bonds coming off just a little bit by about 10 points. Nothing really to see there other than we don't think that the Fed is going to raise interest rates, right? So we're going to kind of see this trend sideways. Yield curve still basically inverted. That's not a good omen going forward because that signals slowing of the economy going forward as well. VIX trying to get a bit of a spike. We are back in the teens, which is nice to see. But having said that, the VIX needs to start really gaining some traction, and if we're going to be selling some short premiums, we're coming back into another earnings season where we've just left the old one. Now we're back into another earnings season, so volatility coming in and around that area is really good for the premium selling strategies for sure. Dow Jones Industrial Average is off by about 150 points. You know, global slowdown, turmoil in Libya, higher oil prices, a lot of these things are negatives to the overall equity markets and the global economies really. NASDAQ is off a little bit, albeit well off the lows of the day, about mid-market, maybe closer to upper quarter, if you will, upper third, let's say, of the day session. But it's really starting to look like it's getting a little toppy here, isn't it? I mean, we've gotten above the value area high. We did get this, we did get our market profile to move. We had it down here, around here. This is where the market profile was lining up as where the most time and volume has been sent. We've seen that shift higher, okay? So we are overextended, but it's not feeling like it's overextended as much as we would normally see this as. If the point of control was much lower, that's going to make it want to roll over a little bit. But we could easily see this market get very comfortable up in and around these highs that we've seen for the 52 weeks highs. We're actually seeing a lot of stocks see their 52 week highs coming in today as well. So with the point of control moving higher, it's still acting as a magnet, but you can see price is being accepted up at these levels as well. So the market's not going to snap back nearly as much as we would normally see with something like this. With the E-mini S&Ps down here, we've got the point of control happening a little bit lower. It has not moved higher as of yet, as you can see here, but we can see that the point of control is starting to look like it wants to move a little bit higher to this area, okay? So as we fill out this part of the bell curve, I think we'll see some volume fill in here, and the overall market will see this shift higher, and this value area high will shift a little bit higher. So I think we're in a groove here. I don't know that we're going to start seeing really new high 52-week highs. We might test that, but I can't see the market really extending and moving higher in great strength above those levels, because the economy is not really robust enough for us to facilitate that kind of a move right now anyway. All right, so let's take a look at the E-mini S&Ps on a 30-minute chart. Each candle is a 30-minute. Each blue section here, these little blue bell curves, are a full day session, has the overnight included as well. But the last couple days, we've had really tight ranges, extending higher. It just feels like we are losing some momentum here. You can see it's getting a little bit tighter and tighter on the ranges. That means that we're really just not seeing that next leg higher going on right now. So that to me signals that the market wants to roll over and correct a little bit. So I think that that's what we're going to see going forward this week as well. I haven't added anything to my portfolio right now. I did take off lows, and I forgot to talk about that with this trade. Give me a second. Let me pull up a lows chart. Let's do lows. All right, so with the lows chart here, you can remember when we were talking about this trade, and I let it get a little bit ahead of myself here. I was looking at this setup right in here with this big red doji and missed it when it broke above this area here. Let it get a little ahead of myself. It's rallying strong. I should have covered this a few days ago, but had a lot of things going on and missed this one. So With that being said, Lowe's, I went in and had on the June was long the 105 puts in there. I originally paid $3.05 for those. I dumped out of those for about $1.50 this morning. So out of Lowe's on that move higher. It just is very strong. Looks like it's going to the 52-week highs. You know, people aren't buying houses. They probably are going to start rehabbing and doing things to their current home, and that will do well for Lowe's. And like I said, I should have covered that last week, like on Wednesday when we broke that pattern. But today I decided to get out of that one and just pull the ripcord, get out for a loss. You know, it was about a 50% reduction in the price that I paid for that. So it's about the time to really get out of that trade. And I don't believe in it anymore being a correction back down to the point of control, which is why I got into this trade. I was expecting this market to want to roll over and come back down, at least come back down to the value area high, just being overextended a little bit, and maybe even come back down to the point of control. Neither of those happens once this has broken that pattern, and as you can see, we should have seen this happening and been a little bit more diligent with that one. All right, that's about it. The only trade I've covered, like I said, was that Lowe's loser. All right. Check out Friday's webinar. It's going to be a really good one. We're going to be extending on this when we have an assumption to build a strategy. This was the right strategy for my assumption and the environment. It just didn't work out, but I increased my probabilities of success with this strategy by the way that I set it up. Obviously did not follow through quite as well on the execution aspect as I should have been with this one, but we learn from that, right? So that's what we're going to have to do going forward. All right, that's all I got for you guys today, other than if you can't take that, take it easy.